content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also a responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
A very good morning. You're watching First Take right here on News 9 Live. I'm Karthik Malhotra, and with me in the studio is my colleague Amit Ranjan. And what a week it has been. Yeah, this is Friday. Thank God it's Friday. But what a week it has been for the markets. And why has it been such a momentous week? Federal banks across the world have chimed in on rate decisions. The Bank of Japan this week pushed interest rates to the positive territory for the first time in 17 years. While Bank of England yesterday kept rates steady at 5.25%, but the action as always came from Fed Chair Jerome Powell's comments. What is he saying? He's hinting at 3 potential rate cuts this year, and analysts believe there could be another 2 cuts next year as well. Let's see how the global markets are faring. We've got pretty much all indices in the green, barring Hang Seng, which is down about 3% this morning. But all major US indices are in the green. Everybody there anticipating this rate cut, which is imminent and likely to happen 3 times in this particular year as we go ahead. Well, amid all this action, there has also been another asset class that has shot up. Well, it is the yellow metal. Gold inched up yesterday to its record high of $2,222 in trade, even as it marginally corrected by about $50. Many believe another round of correction in the glittering metal could be in the offing. But let's just talk about global markets. All right, there you have it. Gold. Last week it was up about 1.5% in the last 1 month. It's crossed almost 10%. And look at the growth in the last 6 months. 15%, breaching that 15% growth in just 6 months. Let's go back to global markets and understand, apart from the interest rate commentary, what else is driving the mood in global markets? Amit, what have you got?
The dollar has gotten stronger, and that has basically sapped the optimism in the eastern market. So Hang Seng, which was in the green yesterday, is in the red this morning by as much as 2.91%. Nikkei was in the red, slightly in the positive right now at 0.07%, but it was red all morning. So a stronger dollar, which is good for the West, has basically sapped the mood in the eastern markets. And everything in the West is in the green, except for the one maverick we talk about every day. It was very high in the green yesterday. Tesla, it's in the red, very low, minus 1.62 today. So that's a maverick. But yes, everything else in the West is in the green, even the stocks 600.
So what is it which is driving the green quotient in global markets in the West? Is there anything in addition to Fed Chair Jerome Powell's commentary that rate cuts, and it's pretty much just a hint, he hasn't gone beyond just hinting at the possibility of the restrictive interest rates not being restrictive for very long?
He has laid to rest all the speculations, and I think that is what has driven the optimism. He has given a clear roadmap that there are going to be, even as a hint, but there are going to be 3 rate cuts. If there are going to be 3 rate cuts and we are already in March, everybody is expecting the first one to happen in June. A few months ago, they were expecting March would be the first rate cut. That's not happened. So yeah, so there is a clear roadmap now. And we know that 3 rate cuts are going to happen. They're going to be cautious. They may not be too much of a factor, but they are going to happen. And I believe that is what is driving the optimism in the West.
Okay.
The dollar has gotten stronger. It had to give an effect in the Eastern markets.
But I think, everything to do with the commentary of Jerome Powell, anything to do with FOMC and the outcome of FOMC, month after month, hinges on this one critical element called soft landing. And soft landing will pretty much ensure that US is looking at inflation no more than 2%. But that has been elusive for the US for a while. Soft landing, hard landing, we still don't know. We've been talking about these terms for the last 18 months or so, I think. Where do you think this is headed, Amit?
So it is probably not as hard as people earlier expected to be. Whether we see the consumer price index figures that came last week, or the producer price index figures that came close after that, all of them beat by analyst expectations, but by not too much.
Okay.
So it is not a very hard crash landing.
Yeah.
But it's not. But inflation figures are still far away from the 2%.
Right. So let's get another analyst, since we're talking analyst projections and predictions. Kush Bora joining us this morning on the broadcast live. Hi Kush, good to see you. Good morning. What's up with global markets? Apart from Hang Seng, we've seen everything else seems to be in the green territory. Is it just Jerome Powell's comments on potential rate cuts, or is there more to read into it?
Hi, Karthik. First of all, very good morning to you. Always a pleasure to be here. Love the energy. Well, I think it's more to do with that. Also, the fact that, these markets were actually doing well. They had gone into a bit of a dizzy just before, those announcements came. And then, the shot in the arm again. But everything said and done, I'm not complaining. The Indian markets also, got that much needed shot in the arm after kind of slide we saw to 21,700 levels. So back to 22,000, and I think we'll probably be in a range from here on 21,800 to 22,200. But the falls probably stemmed for now, and that's a good thing.
All right, so let's pull up Indian markets while we are at it. And looking at Indian markets, they haven't had a great start to the day. In fact, markets opened in the red this morning. So what is your takeaway? I mean, what is it which is actually holding the bulls back at the moment?
IT, that's the only space that is holding the Nifty back. Otherwise, if you see, the 22,000 mark should easily be conquered. In fact, I'm a little bullish for the day as well on the market. I think, the 22,000 level should be conquered again, if not today for some reason, given it's a Friday, truncated week coming up, perhaps in the next couple of days it should be. So I'm a little bullish on the market. Also, my confidence comes from the fact that, the 22,000 put option had the highest put base, at close yesterday. And today too, we've seen a 15% open interest rise on that put. So somewhere the participants do believe that, the downside from here on may not be as steep, at least for the next week or so. So I think, we are on a very, firm footing. The fact that we did close below 21,800 on any given day, even if we slip to 21,700, that also is a sign. So I think 22,000 to 21,800 is perhaps the range that, the market will be looking at on the downside. But I think from here on, buy on dips perhaps is a good strategy to come back to again.
Kush, we talk about Nifty Bank, which factors in almost 35% of the Nifty 50. Do you think it's up slightly today? Do you see that? And it's been up for the last 5 days also. Do you see this uptrend at least continuing? It'll be good for the 22,000 will be easier met if that happens.
Nifty Bank, right?
Yes.
Well, the Nifty Bank, in fact, has been in a tizzy for the last 9 sessions. I mean, yesterday was, I think, the first session after 9 long sessions of, lower low kind of a formation where the Nifty Bank actually turned positive. What this does is that it makes the risk reward ratio extremely favorable. We were getting a little constructive on the Nifty Bank. The only issue that we had was, the fall wasn't, coming to a halt. Now, in the near term, we did see the Nifty take support at that, 45,800 support zone and rebound from here. And I think the risk reward ratio is, strongly in favor of Bank Nifty. So I think 47,100 and 47,500 are the levels that we are looking at on the Bank Nifty. On the downside, it could perhaps, stem or take support at the 46,400 mark. Now, will this really translate into the Nifty going to the 22,200 or higher? Maybe not, because as we are seeing today, there is that divergence. The bank Nifty is in the green, while on the on the pressures that we've seen, from the IT space, the Nifty is in the red. So this kind of sector churn might continue. What will happen is that if the banking stocks do continue to hold or perhaps even move higher, what we are saying that the 22,000 pivotal level perhaps should hold. And I think from the broader market perspective, at least, that is one thing that we'll take with both arms open.
You're talking banks, Nifty, bank and banking stocks, but those don't seem to be your stock picks this morning, Kush. What are your stock picks for our viewers?
The two picks that I have is one, Indian Hotels. That is the stock that we have on our radar. The target here is 575, 585 in the near term. 555 to 550 is a strong support zone that could act as a stop loss. Jyoti CNC, that is a stock that we shared with our clients. Also today, we had given that out as a call as well, with the second target of 655. But I don't think that is actionable anymore because the stock's now locked into a upper circuit of 10%. So I think we are going to give that a miss. As far as banks go, I think it's not a bad idea to focus on some of the large names. So ICICI Bank and SBI is something that, the viewers can have on their radar.
Okay, and Indian Hotels specifically, what seems to be generating so much excitement that you're recommending people to go and buy it? What are the triggers?
I mean, look, from an overall perspective, if you see the kind of religion tourism that or spiritual tourism that we've seen, that actually didn't really allow the stock to even correct as much as some of the other names had corrected. Also, with the vacation season coming up, we know everything's running full. I mean, I've tried getting a booking at some of these names.
Yeah.
Haven't really been successful. Correct. Also, from a technical standpoint, when the stock slipped, it held on to the 545 support zone, didn't even hit the 50-day moving average mark and rebounded from there. Okay. So I think even if the stock consolidates with a positive bias, I think once the market settles, the up move should continue, well beyond the targets also that we've mentioned.
All right, the up move should continue is the word coming in from Kush Bora. Kush, stay with us. Time for a very short break right here on First Take. But on the other side, why is gold glittering? And the government of India's bullish stance on electronics manufacturing. How is that going to impact stocks? And moreover, when are the bulls going to race back? All that and more coming after this very short break right here on News9 Live.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this. Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Welcome back. You're watching First Take right here on News 9 Live. A quick look at the mood of the Indian markets at 10 a.m. this morning. There seems to be some correction in the small caps, moved from that red into the positive territory, up about 0.35%. The momentum seems to be building even for the Nifty mid cap. Where are the broader stocks going to go and the broader markets going to head is something we will keep bringing to you. But let's move to another interesting story that has made headlines all of yesterday, and this has to do with gold. Gold globally inched up to its record high of $2,222, breaching that $2,200 mark in trade yesterday, even as it marginally did correct by about $50. But many analysts believe that another round of correction could be in the offing, and gold could correct by as much as another $80 or so. Kush Bora continues to be with us on this broadcast. Kush, what is making the yellow metal glitter?
Well, I think a lot of caution from the global scenarios and a lot of mixed news coming in. Some day from China and the other day from US. Perhaps that, but again, being a commodity, I don't really track this too closely, so that's the only input I can give you right now. However, I will also bring up the fact that we did discuss Nifty turning positive. When we started the conversation, I think the Nifty was down about 50 points.
Yeah,
almost came into the positive. 10, 20 odd points remaining now. So I think there's still a long trade to be played on the Nifty.
All right. And Kush, while we are at it, there is obviously, another story which has come into news this morning, and that is to do with the regulator telling mutual funds to stay away from ETFs that invest in. What do you read of this? The $1 billion threshold, is that getting breached, and is that the RBI's only concern? What seems to be the issue with Indians wanting to take part in the global stock story using the ETF route?
Slightly divergent, the fact that there should be choice, there should be, the investors should obviously be allowed, and which they are. But what is also heartening is to see the fact that, there is a certain degree of guidance coming in from the regulators. We saw that, and this perhaps will actually play out in the favor of investors. So I think from that perspective, as long as the investor interest is protected, as long as that's the that's at the heart of the entire directive, then I think this is for the best. And I think we'll perhaps see what happened in the small cap and the mid cap space as well. Every analyst that you spoke of, fundamental or technical, was saying that there is froth building up. Only when the regulator stepped in and perhaps gave a nudge is when everyone sort of realized that that perhaps indeed is the case, and the stocks corrected and the froth came off. I think something similar also might happen from a global perspective. We know at the moment, even from a global perspective, the best place to invest is in India, so it might as well be here, right? Why go out?
All right, the best place to invest in is India, and that is something that my colleague Amit Ranjan here has also done some research on, especially on electronics manufacturing. And with the government's thrust on Make in India getting even louder, especially with semiconductors capturing India and the world's imagination, let's see what electronic manufacturing stocks have for us, Amit.
Yeah, so we had picked the story yesterday when Jefferies had gone bullish on certain electronic manufacturing services stocks and had projected almost a 55 to 60% EPS compounded annual growth rate for most of these stocks. Now the this sector is expected to grow by 35% between this year and financial year 2026. Now, the stocks that they had named, one was, Jeffries had named, one was Sirma SGS, the other one was Keynes Tech, and then there was Amber. Most of these stocks have gone into the positive today, but for Amber Enterprises, and there's another stock in the sector which is a very big global player, Honeywell. These are the only two that are not doing so well. Kush, what is the reason why these two stocks, and Amber being named by Jeffries, still in the negative today?
So,
Kush?
Yeah. Am I audible?
Yeah.
So, well, I think, the fact that, we had seen a long, rather a long phase where, a lot of these names had performed. Thereafter, there wasn't as much follow through, and, every rise sort of turned out to be a selling opportunity on some of these names. Even the fund interest was perhaps, missing in some of these names off late at least. And we've seen those corrections, come about. Now, Amber Enterprises, particularly if you see the last couple of sessions, has attempted a rebound. And from a risk reward perspective, I think this might turn out to be a favorable bet. So I think this is something that, you could in fact have on your radar from a long perspective, from a fresh entry perspective also. I think the other stock that you mentioned was Honeywell Automation. This is in a bit of a consolidation mode. The stock's been trading below its key averages and key support zones for a while now. I would perhaps give it a miss, even if there is any kind of, a positive traction on this one. So Amber does look like a fair risk reward trade. Honeywell Automation, not as much.
And what do you make of Dixon, which has been in the news for more reasons than one? The PLI advantages that they are taking, the China plus one, the story that's going in their favor. Is there still steam left in it, or the 171% gains that it has given over the last 1 year, it's maxed out?
So Dixon is a buy on dips kind of a setup. It had a massive fall, but what is extremely heartening is to see the recovery. The recovery also has been equally sharp. The stock fell to about 3,000 odd levels, even below those, and in the last just year or so, it's actually more than doubled. So this is a very heartening story. Now the setup that we're looking at is making it a little buy on dips kind of a setup, because we're seeing divergences. The price actions have moved, but the momentum really hasn't caught up as much. So it will for sure be on our buy radar, but let's say closer to support levels. If it comes to 6,800 or perhaps even 6,600, those kind of zones is when we will look at fresh entry. From here on, the risk reward ratio may not be as favorable.
All right, and Amit has also done some research on the fact that are bulls really getting tired in the Indian stock markets? Amit, what is your research telling you specifically? What do you have for us?
No.
And where are the bulls going to rage from here?
So we have had a bullish year. All the studies tell us that. But the last 1 month, we saw a sharp fall one of the days. And after that, it has not really picked up to that much. So the news was, or the commentary was, that now it's going towards the bears.
Okay.
But if I can go to the PE ratios, most of the sectors, their current PE ratios are higher than their 5-year medians. So the price to earning ratios for the currently are higher than what their average is over the last 5 years. Bar some, most of them are in that space. Now, if we put this table along with the weighted moving averages, if we can have that, and see that we have taken a comparison between the 200-day weighted moving averages of most of these sectors and the current. Most of them, the current weighted moving averages is more than their 200-day. Not all of them, but most of them. So the indication is that the bears are not really taking over the market. It's really still with the bulls, but only probably they are waiting and watching. Kush, what is your take on that? Are the bulls tired? Are they still waiting? Or is it going to head towards the bears up to the elections?
Well, so my broad general assessment is that we are in a bull run. And what happens is that, in bull runs, you do have these sharp, sharp down moves, which perhaps, makes you shudder at times. But I think other than that, there isn't much into it. See, even if Nifty falls another 1,000, 1,500 points from here, will that view change? I don't think so. We've had a sharp run up. We've had a good run up, especially in the mid cap and small cap names. And if you see there too, once the froth came off, the stocks are actually starting to move higher. This is the exact setup that we'll see on Nifty as well, perhaps in some of these large cap names as well. So while for the next week or two, we look at 21,800 to 22,000 as the broad range. We do believe that there is a pre-election rally that might kick in, perhaps take the indices to a higher level, and that could be the near-term top for the market. But even if that happens, even if let's say for a quarter or so, the market doesn't really go anywhere, that is just a bull market consolidation that we're looking at. So for me, anyone that's looking at the markets from let's say a 12 to 24 month kind of a horizon, these dips will very much be buying opportunities. And you're right to say that the bulls haven't really given way. It's just that intermittent, we're giving those happy moments and something to cheer about to the bears as well along the way.
Kush, yeah, bulls really haven't given way, but there are two sectors where the weighted moving average is currently less than the 200-day median, and that is FMCG and metals. Do you see the FMCG was on an uptrend earlier on in the year? Where do you see the trend in these two sectors going?
Now, very interestingly, I think the FMCG space will continue to consolidate for some time. We've been very selective. In fact, barring ITC and maybe a couple of other, trending plays, let's say, something like a Britannia a while ago, I don't really remember, putting out too many calls in the FMCG space. Even from a medium-term perspective, the index has actually come below the 200-day moving average, and only just today, it's reclaimed that territory. So I think the consolidation in the FMCG names could continue. I'm sure. I think even you had put out a story where the rural consumption hasn't really picked up, as much as some of the urban names and the premium names, have done. So I think that is something that is playing out in these FMCG names. I don't think there is a great upside, in some of these names. Positive bias consolidation, or from an investor or rather a portfolio fund protection perspective, if you have some of these names in your portfolio, that's fine, but not for an alpha or the quick buck. Metals, however, are a slightly different story. They're very volatile, but here selectively there are names which are actually in an uptrend. Again, the global news, especially the ones that come out of China, have put these stocks, in a volatile territory. But if you look at the likes of Tata Steel and Hindalco, even JSW Steel to some degree, they've been doing rather well. So metals, I will be selectively bullish, and any dip that I get in some of these names to very strong support zones, I will actually go out and add more, because then the risk reward ratio becomes favorable for me. But FMCG, not too constructive. I'd perhaps give it a miss for now.
Okay, and the FMCG story, Kush, do you believe is also linked to the political story? And how do you see the FMCG story play out in the election cycle and in the immediate aftermath of the elections?
Well, ideally, this time of the year should perhaps be, a good time for some of these names. Some of the other areas or sectors that benefit. One of them is yours. Media. We've not really seen that happen just yet, at least in terms of the price movement. If I look at some of the, big names also, even they haven't really done well. And this I'm talking from the FMCG space. Look at the likes of Dabur, Marico, Britannia. So I think this pressure will continue. So even if on the business end, they somehow, see an uptick, I don't see a big price action, that translating into a big price action. Perhaps if someone wants to consider a safer zone or a safe haven, I think pharma, and there too again very selectively, but pharma still has many more pockets than the FMCG space for you to park your money in, at least from a safety perspective. So FMCG I'll continue to watch, but nothing so encouraging just yet.
Okay, and what about the auto space? Because that is one space that has seen a lot of action, not just in terms of demand, domestic demand, but also in terms of multinational players coming into the Indian market, whether you talk about the JSW and MG Motor deal, or headlines emerging today of Volkswagen looking at entering India in the EV race, and also the import duty reduction on foreign cars, which is likely to benefit Tesla. So how do you see the auto space moving? I know the impact is unlikely to be immediate, but let's say over the next 3 years or so, is this one sector that you're really betting on?
Oh, absolutely. And, while you've already mentioned that, the auto space is doing well, and, I'm sure you're largely referring to the manufacturers, the likes of Maruti, M&M, and, even Tata Motors. So they've already done well, consolidating with a positive bias. My focus is mainly towards the, auto ancillary space. I think there is a lot of room on the upside from an immediate perspective also. So the likes of, Sona Comms or, Lumax Auto, Jamna Auto, some of these names, they look very attractive. There was a sharp fall, but the recovery also has been equally sharp, in these names. So I think if you really want to play for, bigger gains, I think the auto ancillary space is something that you can focus on, while capital protection and some sort of capital appreciation will continue to happen in Tata Motors and even Mahindra and Mahindra. I think the alpha will be generated out of the ancillary names like as I said, Sona Comms or Lumax Auto for that matter.
All right, so that's the word coming in from Kush. Kush, thank you so much for taking out time this morning to be right here with us and helping us and our viewers make sense of all the ticks in the market on First Tick. But before we end, a quick look at the market's mood check, and we have seen the Nifty small cap and now even the Nifty mid cap move into the positive territory. Just a few more points left on the Nifty 50, and it seems like in the next couple of minutes, if not a little longer than that, we will have the markets trade in the green. Well, the volatility has also reduced. We started near 3% volatility in the markets. It's almost flat now at next to zero. That's all we have time for on this edition of First Tick. But after a very short break, all that is happening in the world of business, World Business Report would be coming for you right here on News 9 Live. Thanks for watching.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free.
You were the chosen